You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to this episode of The Whole Truth podcast. I'm Paul Armstrong. You'll notice that the backdrop to this podcast is different from most weeks, and that's because we're coming to you from the Resources Rising Stars conference on the Gold Coast. I've just had a chat with Patrick Duffy at the conference. Patrick's the relatively new Managing Director of Sunstone Metals. He's been in the seat now for 4 months, taking over from Malcolm Norris, who now is running the exploration program. The company has had some great exploration success in Ecuador, but there's a pretty widely held view that there's a disconnect between what they've got on the ground and the value of the company, which sits at around $30 million. People at the conference are saying, what is it about Sunstone Metals that I don't get? At $30 million with these exploration results, it should have a vastly higher market cap. And we explore that issue with Patrick on this episode of the podcast. He talks to us about Limon, which is a gold-silver discovery in the south of the country, which has an exploration target of 900,000 to 1.7 million ounces. That in itself is a major success, and the company is drilling to grow that from the exploration target phase to a resource. But it also has a big discovery in the north of the country, which, as Patrick tells us, the company is looking to transact in some shape or other to accelerate the growth and unlock the value of that while retaining some exposure to the ongoing growth of the inventory. It's a fascinating company. There's plenty in the pipeline. There's news flow coming. Patrick's only been in the seat, as I said, for 4 months, and he's intent on unlocking the value of this for shareholders. Have a listen to this and see if you think the disconnect between the value of the company and what they've got on the ground presents an opportunity for investors. Patrick, you've got a big discovery on your hands called Limon in southern Ecuador. There's been quite some talk about what this could be as you drill it out.
Yeah.
What do you think you've got?
No, so Limon is an epithermal discovery that was made 12 to 18 months ago. We've been drilling since then and getting some amazing drill results at Limon. One hole was almost 200 metres at almost 3 grams, so astounding results. But it has an exploration target of 0.9 to 1.7 million ounces of gold equivalent. And we're looking to continue drilling and establish that as a resource in 2025.
Now, 900,000 ounces to 1.7 million ounces of gold equivalent. That's a big inventory in what is effectively an open pit with the mineralisation starting practically from surface.
Yeah, no, very nice grade. Still to see, obviously, how it falls out in a resource, but it's comparable to any strong sort of gold mine that's in WA, and it is part of a much bigger strategy to build out our assets that we have in Ecuador.
So investors would look at this and say, well, put aside the other assets in Ecuador, which we'll get to in a moment, but let's just focus on Limon. It's pretty much a WA-style open pit proposition.
Yeah. If
you've got just 1 million ounces of gold in an open pit from surface in Western Australia, the market cap can't be $30 million, as is the case with Sunstone. Why do you think there's such a disconnect between the value of the company at the moment and what you've got on your hands at Limon?
Yeah, I think, one, it's obviously been a difficult market, and probably the market's lost focus on the huge upside that we do have at Ecuador with Sunstone. Just on the desktop work that we've done, we think it could produce between 100 and 150,000 ounces per annum, which is comparable to a Capricorn Resources or Emerald Resources, both producing 120,000 ounces each, and both now in production. Market cap's well over $2 billion, and as you say, we've got a market cap of 30.
So there's clearly a big opportunity here for investors at $30 million market cap.
Yeah.
The question is, I suppose people would say, well, how do you get that exploration target of up to 1.7 million ounces into the resource category? What's the timetable? What are you doing about that?
Yeah, so we think we need another 5 to 10,000 metres of drilling to get a sizable maiden resource, something that meets the expectations of the market, and at a level where we can then proceed into initial scoping studies. But that can be done easily in the next 6 to 12 months. We are looking for partners to help us on that journey if that helps accelerate the process. But yeah, it's a hugely valuable resource that we do have, and I think the market will be extremely impressed when we're at a point in time where we can put out that resource.
There's got to be some sort of closing of the gap, doesn't it, between what you've got at Limon and the market valuation, and that's before you take into account these other assets. Now, let's explain how Limon fits into the scheme of things here, because Limon itself is part of a wider project, Bramaderos,
exactly.
in southern Ecuador.
Yeah, so Bramaderos is our more advanced project. We've done a significant amount of drilling on the porphyry components of the project and have a resource of 2.7 million ounces already at Brahma Elba. There was a deliberate strategy to look for a high grade system such as Le Monde to complement what we do have with the big porphyry systems. But if we can get Le Monde into production first for much lower sort of modest levels of development capex and get that into production, and again producing 150,000 ounces per annum, that gives the revenue, the cash flow and the balance sheet then to be able to build the bigger multi-decade operation potential that we have at Bramaderos.
So the game plan, as you say, Patrick, is to start with Le Monde. It's a conventional WA style open pit proposition, 150,000 ounces a year, generate free cash flow, low capex, and then start to develop the bigger long mine life Brahma, albeit lower grade porphyry style proposition, which presumably will have a much bigger throughput.
Yeah, and producing, let's say, 300 to 500,000 ounces per annum. So global scale, multi-decade. It's in an area that's very attractive for mining. So it's in a valley, 900 metres above sea level. There's no native forests, no protected areas, no indigenous communities. And the community is very, very pro-Sunstone and looking for Sunstone to develop these assets.
Now, that's all in southern Ecuador, Patrick.
Yeah.
Now, up in the north, you have a project, El Palma. Tell us about that and what the thoughts are there.
Yeah, it's a phenomenal project. It's adjacent to a huge copper porphyry system owned by Codelco and not too far away from SolGold's Cascabel project, both a billion-tonne resources. And at El Palma, still early days. We've done about 25,000 metres of drilling, but we can see a huge gold copper system, similar scale to what's adjacent to us at Codelco.
That's a big undertaking for a small company. Yeah. Is there a prospect there for, selling part of it, transacting it in some way, shape or form that might say you can retain some exposure to the upside, but a big company with big pockets might come and tip the money into it and make it all happen much faster?
Yeah, no. So one, I think we're a victim of our own success. Two great world-class projects, but difficult to fund in this market. We are actively in discussions with other groups about partnering on El Palma.
Right, so that could unlock the value much faster.
That's right. If we end up with a 20-30% share of a multi-billion-dollar project, that's worth more than today when we get very little for what value ascribed to El Palma.
And presumably, if you were to keep some exposure to the upside of El Palma, but then you can focus your time and your money on, for the first case, Le Monde.
Yeah, precisely.
So it simplifies the story a bit.
Yeah, so So I've been in the role for 4 months, working through the strategy with Malcolm and the team, but right now, very clear, we've got the opportunity to put out a resource shortly for El Palma, which I think the market will be surprised at, just given the limited amount of drilling we've done.
What sort of time frame do you have on that?
Yeah, I'd expect early in the next quarter.
Yeah.
Yeah, so that work has started.
And that'll open the door to corporate discussions.
Yeah, I think the market will be able to see the potential, have an exploration target there also, but also for corporates looking at the asset, they'll be able to get reassurance that there's already a decent resource available.
And then you can say, right, we're going to put our efforts into Le Monde because there's some low-hanging fruit there that we can get a project of our own.
And that's right. Obviously, we're a small company able to fund a project of that scale. And if we've got partners involved in other assets, then that will help us get to our end game.
I mean, there is so much going for this company. I know investors have scratched their head and say, I can't believe it's only got a $30 million market cap.
Yeah.
What am I missing here?
No, that's right. So I make the analogy, in Australia we have De Grey, which owns the Hemi Mine project. It has 10 million ounces. At Bramaderos, we have an exploration target of over 10 million ounces. And El Palma, I think, is a similar scale. So we have two projects of comparable scale and quality to De Grey. And today, De Grey is almost a $3 billion company, still pre-development, still to construct what's an amazing opportunity in WA.
And the idea that you can bring a partner in and accelerate perhaps El Palma means that you've got multiple areas of creating value for shareholders that can go in parallel.
No, that's right. These huge projects in South America sort of naturally will end up with, I think, one day with the majors. And in this market, we're looking at those strategic options, and if it's the right time and the right party to partner with, we'll certainly bring them into the stable.
So you mentioned the upcoming resource on El Palma in the north of the country. What else is in the news flows coming in the pipeline?
Yeah, so one, El Palmar resource, two, potentially partners for El Palmar, and third, if continue drilling and establish a resource at Lemon, I think everyone will start to appreciate the full value that we have in our portfolio.
Yeah, as I said, it's quite a conundrum. People are scratching their heads about the valuation disconnect and sort of saying there's got to be an opportunity here, but perhaps that news flow will alert people to exactly the extent of what you've got and the underlying value.
Yeah, that's right. And again, I think bringing a partner potentially helps solve the funding solution to help progress Lemon and progress Bramaderos. So we're looking at all those options, and again, I think if we can deliver those three immediate sort of goals, we can easily double, triple the share price from what it is today.
Great. Patrick, thanks very much for your time.
Okay, thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.